Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the Euro versus US dollar from a technical perspective. Today's day is March 1st. We're starting the Asian session, so a new trading day. So let's get started. Looking at the technicals in this currency pair, it's important to understand what we did over the last few days, and that move to the that was a move to the upside. That saw initially the price move higher on Wednesday, coming up to test its 200-day moving average. That's the green line in this chart at 1.08317. And then we moved above that level in trading on Thursday, extending the upside momentum. That upside momentum continued until we reached this swing area, 1.08656. That level was defined by a number of different swing highs through here and here and here. And then there were some swing lows through here where it found a floor, or developed a full floor, moved higher, moved higher in that area. And then back here, this was a ceiling again. So it was a ceiling, floor, ceiling. And last it was a ceiling, and we came up to that level, found willing sellers, came back down to test the 50% midpoint before basing and moving higher and getting above the 100-day moving average. That's a blue line in this chart. That should have sent the price higher, but we did start to see some profit taking. And then we saw everything kind of unravel in the end of the New York session, with stocks moving sharply to the downside, yields moving lower as well. But the market in the euro versus US dollar thought best of it to sell the euro versus US dollar, buy the US dollar in this case, and maybe perhaps the Kashkari comments, other Fed officials this week who have been a little bit more hawkish started to weigh, but that doesn't really jive with the U.S. yield move today. But nevertheless, the euro versus U.S. dollar started to move to the downside. And that move to the downside continued all the way until a familiar place. That was the 200-day moving average, which again, we traded above and below at the close of yesterday. So we had a full retracement of the move, a lap, I like to say, and started to find some support near the 200-day moving average. So what next? Well, as we head into the new trading day, of course, we're going to have the U.S. jobs report coming out tomorrow in New York at 8:30 a.m. There's a lot of time between now and then, but what traders will likely do, or potentially do, and what they're so far trying to do, is find support buyers against the 200-day moving average. If the price can hold above that level, the bias is modestly to the upside. If we move below that level, the bias is modestly to the downside. And we'd look toward, say, the 38.2% retracement at 1.08219 as the next target, and then down at the 200-hour moving average at 1.0803. Alternatively, if you stay above, the 50% retracement is going to be a level that the market is going to be concerned about. That was at 1.0852, and you can see the price moved above that level and then came down, tried and held it through here before moving to the upside. When we fell back below it, we started to use the level as a resistance. So, if I were to decide on a range for the Asian session, it would be 31 to 52, about 20 pips, and we'll see what happens from there. But that's how the euro versus US dollar is setting up into the Asian session. So that's my technical view of this currency pair. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.